Good day, fellow investors. There have been a lot of questions over the last 2 weeks about Nike, whether it is now a buy, as the P ratio has fallen down from 37 to 19. And I've discussed Nike in the past as it is a very requested stock, but I always told you flying high, likely to fall because Michael Jordan can likely still dunk but not fly anymore. If we take a look at Nike stock now, from where it was flying very high, it is down from 177 to the current stock price of 72, and that means 60% down. For a great business, a great brand, everything great, great profitability, buybacks, dividends, everything great, and then you find yourself with an investment down 60% because the price here, paid here, was simply too high relative to the value. Now the P ratio is 20, a little bit lower. The dividend yield is already something at 2%. They will likely keep doing buybacks, but let's discuss a little bit more the details. If we look at the numbers, the company has been growing and is continuing to grow, and now the stock has crashed because revenues have flattened for, let's say, the last year and a half. Net income already flat over the last few years, and now their guidance is for declining revenues, thus also declining profitability, and therefore the valuation goes down from 37 to 20, and you see the 60% stock market crash. When everything was looking great, the company was growing, people were willing to pay 37 times earnings because they expected this will grow into eternity. That is always the fallacy with growth stocks, and why you have to be very careful, because sooner or later the growth stops. And now the news is how Nike loses air after shocker results and sends shares sliding. To see what happened there, we have a great summary from every news outlet. Sales and guidance landed short of expectations, raised concerns about consumer demand in North America, recovery in China, macro factors, competition. There is also foreign currency exchange as the dollar is strong. And the CEO said 2025 will be a transition year for the company, and revenue is anticipated to fall at mid-single digit, worse in the first half of the fiscal year, and then hopefully improving in the second half of the fiscal year, which means next 2 quarters will be even worse than this. When results are not good, the stocks can go even lower. And I already discussed this just 3 months ago when Nike stock was down 50%. Now we are down 60%. And just to tell you, I told you so, everything was about the turnaround, Nike Air, all about innovation. Thus, they were turning around such a business. And yes, investors were banking on growth from that innovation. And I asked you, what happens if not? That is the risk and reward analysis. We'll later cover this in the stock categorization on what kind of buy this is now. But if there is no growth, then things change, and you can see here 22 analysts, this is from a few months ago, were estimating continuous growth in Nike's earnings per share, just growing forever. But that has changed. Revenue grew just 1%, and earnings per share still grew 15%. But if we look at guidance, transition year for our business, says the CEO. However, they are making progress on the comeback, and the key thing here is what impacts the guidance down mid-single digits from 10% growth forever, buybacks and whatever. They're going down mid-single digits, and 3 things driving the change. Of course, Forex exchange, strong dollar, but also softened outlook for Greater China, maybe also weaker demand in the US. This is always consumer trends. It's hard to know what your kids will be buying. And if we look at fashion cycles, those also impact big brands over time because customer preferences are fickle. masses move big when those move. Adidas, Nike, then something else, then something else. But I think Nike will not go out of business. That's the key thing to understand. And maybe there will be an opportunity like we have seen in Adidas just 2 years ago when the stock went from 99 euros to the current 237. And just to counter all those comments that tell me every time I make some mistakes, how I told you that Adidas buying now will likely make you money, and this was 115. Now the stock is a 2x from there. And let's compare also Nike now and see whether it might be a similar opportunity to Adidas 2 years ago, because back then Adidas was having an earnings potential of 2 billion euros and was trading at 22 billion euros, thus a P ratio of 10 for Adidas that reverted over time, and now we have a 2x as the P ratio has normalized. However, now Nike is still at a P ratio of 20. That is twice what Adidas had when it was hitting rock bottom. And P ratio of 20, of course, I said it will not go out of business, it is still profitable, but P ratio of 20 is, let's say, mid-market range, and it's unknown when will the company turn back to growth. If we go into stock categorization, if we look at from a relative investment perspective, yes, now it is cheaper than the S&P 500, but it is also not growing. I think Nike will find its way to growth from 2025, 2026, 2027, like Adidas did. They have this global market presence, global brand, everyone knows it. So they will likely find their ways of growth. So buying when the company has temporary issues is always a better buy than when it's growing 10% and has a P ratio of 40. From an absolute investment perspective, we are now at 5% yield and maybe future growth going ahead. However, if I want to compare this to Adidas 2 years ago, then we are discussing value investing, and if let's say Nike's current earnings potential is 5 billion. If I add the P ratio of 10, 12 to it, then we are at a market capitalization of 50, 60 billion. And now you tell me, Sven, you are crazy. That means this stock price should half again, go 50% down. And that's crazy, Sven. Well, that was a stock price 10 years ago, and it could go even lower. If we have a market decline of 20%, a recession, that would push the stock just to natural forces down another 30-40%, while Nike could still be doing good business. In that case, let me tell you this, that if Nike goes down another 40%, I will consider it for my diversified portfolio on my research platform and also make a video about it here. So when it goes down, if it goes down, please remind me about that here. For now, when I look at Nike, this is also something why I don't like repurchases, because they were spending billions on repurchases at much higher stock prices. So that's thrown money now when the stock price is down. You can do repurchases only if you are sure that every year you will make huge profits and that your valuation is cheap. Doing repurchases at a P ratio of 40 is stupid, and that's also something that Warren Buffett says. So they also know how to destroy value, and in these situations you see how value gets destroyed. So from a perspective, wake me up when we are 40% down. Now, I don't think you will lose money with Nike long term. If you buy now, you will get that yield, earnings, buybacks will make earnings grow, etc., etc. The brand is there, so it looks okay. But it's not the Adidas opportunity that was there 2 years ago. And keep in mind, customer preferences in the fashion world are always very, very fickle, and you never know what these kids will want to buy going forward. But I'm pretty sure Nike will not go out of business. Okay, much better now to buy Nike to conclude, but not yet a great value investing opportunity. Thanks for watching. Subscribe for more.